more company level side. I think historically, most of the real estate have been held by non-traditional real estate companies. So you had banks, you had conglomerates, you had institutions. That real estate was primarily not their number one focus. Over the past few years, most of these institutions transfer these assets into entities like REITs, funds, and most of the major players in the industry. That was in the past, in the early part of the 2000s. But over the past few years, what we've seen is a lot of these companies, when you look at most of the listed entities, are more or less recapitalizing. So you're distributing equity. And this is mostly on the public side. So a lot of these companies, a lot of us are going through reorganization. Again, to raise additional equity. We've all had debt issues in the past few years. So a lot of this reorganization is what is really driving the industry right now. A lot of us are refocusing. We at Mixta, we chose to refocus on affordable housing because that's where we see the market. And through that, we're able to attract better capital from impact investors, and we've seen this through some of the issues we've done in the past. So I'll let them talk about that instead.
Yeah, just before you do that, I want to just speak a bit on capitalization and raising money from capital markets. I know you were successful relatively in doing that. What were the challenges that you went through? How did you get around them? And what do you think would be the best way going forward to succeed raising money that way?
One of the greatest challenges we faced as at Mixta initially was the recognition of the brand. A lot of institutions were not familiar with the story, so we had to go through an initial show of just telling our story, what we do, how we differentiate our business from others. A lot of people were not, a lot of investors were hesitant about real estate. They still are, when you look at your institutional investors. But at the end of the day, they also recognize that it's something they have to participate in. So again, it's sharing and helping them understand the story, helping them differentiate your business. And so initially, we did the first tranche of 5 billion, and that we had to provide some kind of brand. So that gave when you think about it, was fully backed by so that gave institutions the confidence. So by the time we came out with the second tranche, we had an anchor investor, a part of that tranche, one of the schools, and then the other half of the integrated. So it's getting easier for us now. The brand is more recognized, the instruments are being performed, so it's easier for them to work with.
So I like how that ends in that you said that the rules have to go through branding and recognition. You did touch on the reality that we have to deal with in that the environment is a bit tough and the investors are largely pessimistic. Then you ended by saying what exactly happened, which is inside all of that, we still were able to come to success and it's getting better and it's getting easier. Thank you very much. Round of applause for that. Thank you very much. Okay, so I think I'll just move to Akin next. What is your view in the state of the real estate environment right now as you see?
All right, thanks. Good morning, everybody. Okay, personally, for us, I'll say it's tough. I were to, as I sit here, my residence of a property broker, I also delved into development a few years ago. So my team have a 90-minute apartment or people at Atlantic. Atlantic is supposed to be the new city just outside Tola Island. That's supposed to be for 250 homes and 150 office units. So it's been extremely challenging trying to get funding for that particular project. We just started applying a few months ago. And believe it or not, the type of feedback that we were getting on that capitalist finance was hey, Akin, I hope you guys know that Nigeria has fallen out of the top 10 investment destinations in Africa. And getting that from prospects was a tough one. I said, look, you guys have always been in this list since forever. But last year we fell out of the top 10. And it's not really about the returns. Because for doing business in Nigeria is quite rewarding, but it's extremely risky. Investments, transactions in the country is tough. I must be brutally honest. I was doing a little bit of fact finding too before I came up, and I found out that I think next to Zimbabwe, you get Nigeria in terms of risky investment destinations. But in terms of reward, I think we'll be very close to Ethiopia. So it's a tough one, but it's also quite rewarding. Getting for our project at the Parliament to put in a few interests, and hope it continues that way. Thank you.
Thank you very much. Round of applause for that. Okay, so Deborah, I know we spoke last time in the recent conference, and I wish we had more time to discuss where the company was going, the ability to really market involved in that conversation. So here we are now in this thing, and I think we have more time than we had last time. So how do you summarize the state of
Thanks, Anna. I'll give a general overview where I think the West African real estate market is. I believe it's still in its infancy if you compare it to the Southern African region with any of the Western regions. So we're still at the very early stages, and it seems strange to say that considering we've had real estate investments for several years now. It's just, we're still a very young market. Nigeria is experiencing a downturn. I think when we look at Ghana has come out of that downturn. It's starting to do much better. Nigeria is going through an even more challenging period than we've had in the past. If you look at the commercial office space, vacancy levels are high, rent rates are falling. There seems to be an oversupply of space in the market. Sometimes I feel like people are still building, or those who are still building had to maybe change plans, or landlords have had to be more creative in the way they offer their space out to tenants, so it's more of a tenant's market. So I think the grade A commercial office space is definitely saturated at the moment. There's a little bit more stability in the grade B space, but for whatever reason, there are not many developers that are looking, not many institutional developers that are looking into the grade B office market space. I think in bid to try to attract international investors, we need the sector investments are the grade A offices, but that's pretty oversaturated at the moment. In the residential market space, still experiencing the same thing. There's a lot of vacancy. However, property prices still actually continue to rise, especially in equally even letting areas. So despite these high vacancy levels, we're still seeing growth for property owners. Those who perhaps have debt, not so much because they have to find a way to recoup the investments, but those who are building equity, they seem to find a lot in residential space. Holding and cheapness and good rates there. In other sectors like retail and hotel sectors, at the moment there's several assets on the market for sale. And it just indicates that international investors who initially moved into these sectors because they were the high growth sectors are now looking for an exit. So the focus right now, it's very tough attracting international money. So I think the focus right now is looking inward and building in Nigeria, waiting for Nigerians. I think focusing on that local market is something that a lot of real estate developers have overlooked in the past because they're constantly looking to attract international money, international talents. As my fellow panelists have said, high interest rates, high cost of building. Those are major challenges for developers, and that continues to be a challenge unless there's some kind of intervention either from the government or from the financiers, not looking at you. And then the high cost of building, at the moment 80% of the materials we use to build are imported. So that high cost of building is important. At the moment, the land costs are high. At the moment, infrastructure is high. So your cost of building is automatically high, which means it affects your returns. So that's a challenge in achieving those points that most investors are looking for. With all that being said, I still think there are opportunities in the market. Some alternative investments that people don't really look at the moment, so for example, healthcare. I think there are definitely opportunities there. Again, that will probably need government intervention. Student housing, there's a huge gap in the market there, and there are really a few players in that sector. So the IBTC recently invested in student housing, so Kola still by Panellist University, and actually one of our best performing assets in the entire region. That is where we should be looking at, because one, you're not just creating a good investment for yourself as an investor, for your fellow shareholders, but you're also creating something that's adding value to the Nigerian youth and growing Nigeria as a whole. It's been very successful in Kenya, and I feel like we can do the same thing here in Nigeria. And then even things like young professional housing, that whole lifestyle, just changing the lifestyle of young workers who have to travel for hours to get to work. If you can find developers that are willing to move into that sector and create affordable living accommodation closer to the central business areas, I feel like that's another huge opportunity for developers. So the market has potential. I think we just need to start looking differently about how we play.
Okay, so we normally clap after then I have a you don't clap. Okay, so 3 years ago, because I've known for you right itself was to show. We are starting to notice what you mentioned in the retail market. What we found was developers that said, the days of 20,000 square meter development have gone, let's just say circa 8,000, 10,000. And that's what we've seen go. And we've also noticed the healthcare boom, so to speak, a lot of development going into, especially diagnostics and terminal illness and point-of-time centers. I also noticed that the student market has been growing so quickly, it's almost unbelievable when you see it over time. If you look at the laws that guide how universities are developed in Nigeria and what they are mandated to the last budget to provide for accommodation of their students, only mandated to provide 50%. And if the university is only expected, according to law, to provide accommodation just 3 or 4 out of every 10 students. But then the challenge of student accommodation is clear that it can be a management nightmare. So in the end, development along certain lines of the work, but then have to look at how management development and but I like how you spoke about funding and financing, and I asked this first question to just open us up because I think it's about the easiest question I have. So, we're all getting into the zone, and we all did one thing which, if not for the person that is here, I would have thought unfair. You all said finance, funding, money. So, she's here. She would just give us, her own thoughts, and then we'll take the question from there. Thank you very much, madam.
Thank you, and good morning, everyone.
Yeah.
I think I'm going to take a different sort of tack in looking at real estate environment, and that's sort of a macro view. So I think one thing that we know about real estate is that, the performance of real estate or the environment is actually shaped in a lagging manner. What do I mean by that? It's because real estate in terms of the development side is lumpy, it takes time, and developers and investors can't respond quickly to what happens. So when the Nigerian economy had a downturn in 2015, 2016, the challenges of real estate just started 2017, 2018, and we're just sort of getting out of it. Okay. So in that sense, what is really important for an investment horizon, as you know, your investment horizon is going to be 5 to 7 years, is saying how are you able to predict what the performance of the investment, the economy would be overall, because there's a correlation. And so if we see where we are now, we're sort of growing 2% per annum. I think real estate for the first time after, I think some 25 quarters or so, in Q2 actually had the first positive GDP growth for the Nigeria real estate. So it just gives you a sense of how deep and how challenging it can be. So our sense is, that's what you look at. And if it becomes a function of the demand and supply that happens in that period. So after very strong GDP growth, the economy growing, a very optimistic view of where the market will end, we found ourselves in a recession. And there was a lot of supply already in the market. Now, where you see is that most of that supply has come through. The pipeline of supply has kind of deepened. And in the last, I'll say 18 months, what we've seen is a strengthening in demand. In my view, demand for Nigeria never actually went anywhere. Because if we look at the amount of space that we deliver in this market compared to even Ghana and going to Kenya, it's a fraction. What you did have is a lack of confidence in terms of businesses making decisions and moving forward. And the absorption that you have seen in real estate in terms of the supply that has come into the market over this period, particularly on the commercial front, is a function of that. I would say from our own little window into the space, the kind of demand that we've seen in the last 12 months has actually been really encouraging, and given where the market has been. So in a contrarian point of view, this is probably one of the best times to start investing in this market. Sort of trying to follow up on one of the things that Deborah said, which is in terms of the stage of the market itself. I think another angle to take in terms of that is that there was a lot of developers who've come into the market, who've developed real estate over the last, I think starting around 15 years ago, thereabouts. So we now have institutional quality real estate. We have just one real major functioning REIT, UPDC REIT. Really, I think that's an opportunity that we should have in the market, wherein a lot of these institutional quality assets are now held in institutional assets that look on the long term. So a number of the developers who've come into the market or investors who come into the market all typically have a 7 to 10 year time frame. The question is, who's the long-term holder of these assets? And how do you begin to ensure that people who have long-dated liabilities, like the pension funds, really have a lot of exposure into real estate? And a commitment not just into real estate, but for this to be actually well-managed real estates with the likes of, I think you had Bro come on the table there, a number of their competitors also operating in the market, where we can actually develop real estate. So stepping one way back is that what is real estate and how do we look at real estate? Real estate actually for me is a function of the overall economy. It's supposed to respond to the demand of services that are required by the economy, and it needs to be actively managed so that it actually eventually operates like a steady cash flow that is being generated to be able to maintain those properties. One thing I say is that, after all the time that has been spent by firms like Actis in developing good quality real estate into the market, and a number of our competitors have done the same, we don't want this to become, in 20 years, buildings that you will not be fit to enter, which is what you have a lot that happens on Lagos Island. Yeah. So if we come back to Nigeria, where do I think we are? I've already said that I think a lot of the oversupply is being absorbed. I think that we are at the bottom of the cycle and beginning to creep back up in terms of where the cycle is. That said, real estate is also something that you cannot generalize because there are a lot of micro factors that you have to look at. Or what demand is actually being responded to. So if I don't do my homework and I develop real estate that becomes unleasable, it's not a function of the market. It's a function of poor judgment. Maybe people are not making as good use of Northcourt services in making their investment decisions. So for us, we do see a lot of opportunity in the market in different areas. We made an investment in the hospitality sector late last year. Yeah. We are looking actively at another investment in terms of the service sector. So there are a lot of investable areas into the market. What you need to do is to have a good understanding of where the market is. So where do we need to do to go back to where we were back in 2014? I think is a function back into the economy. The question you would ask is, what do we need to do to get back to 5-6% minimum growth rate? I think I'll stop here now.
Thank you very much. Let's put our hands together for that.
Can I respond?
Yes, you can.
Okay. So I just wanted to respond to the comment that Funke made about the role of the PE funds like the Actis and then the roles of the REITs like UPDC REIT. So I think in an ideal market, the land that we have in Nigeria is typically owned by individuals. So the structure that a real estate transaction should play would be a PE fund like an Actis partners with a landowner who's an individual to build these assets. And these PE funds have a shorter term, or maybe I'd call it a medium-term horizon of 5 to 7 years. And then at the end of that 5 to 7 years, the ideal scenario then would be that a PE fund exits their asset into a REIT, which has a much longer term horizon. But there's so many challenges across that cycle. Firstly, a lot of landowners sometimes can be emotional about their land holding and feel as though they can do it themselves. If you do find a landowner that would partner with a PE fund, the high cost of building and the quality of building, grade A spaces, luxury residential, large retail malls, etc. At the point of exit in 5 to 7 years, these PE funds are looking at creating returns to their ultimate shareholders or investors. The issue we have is at that 5 to 7 year period and the cost at which they will exit those assets. Because of the cost of building and maybe the change in the economy during that 5 to 7 year cycle. So they may have assessed a project, assuming, let's say in the commercial real estate space, $1,000 per square meter, $1,200 per square meter. At the point of exit, however, you have FX issues, it's a tenant market, you don't really have the international players seeking space anymore, so the rent rates have fallen to maybe half of the level that they were initially projected. So a REIT buying it, ultimately a REIT has to be accountable to its shareholders and make sure what you're buying is a good investment that can offer a good yield. So if you're buying the asset at an extremely high price, it doesn't make investment sense in the long run. So there's so many things that affect the ability for that ideal scenario to work. The cost, the rent rate, and the market. So that's why, although it's an ideal situation, it's just very, very tough to achieve. So I just want to
Thank you very much. I want to move to Kola. Going in for a second round. A lot of things have been. You need to respond. See, look.
No,
okay, let's respond.
I think the only thing I would say in terms of response to that you just sort of highlight what the risk of investments is. I don't think that any investment that was made before the Naira devalued, there will be an investor, an owner who would expect when he's exiting to fully recover from that. So that is a function of investing. So really, how do you trade assets? Assets are traded based on the income they can generate, and that's how they are priced. And so the value of an asset does not depend on the time, it doesn't depend on who the investor is, And so there are no investors who expect a guaranteed return. I think people, if they've done their homework will ensure that the valuation does not reflect the losses or the issues they may have had. But like we said, people would have done their homework properly, would have realized that if rent was 1,200 and there were only 2 buildings charging 1,200 and 10 new buildings come into the market, they wouldn't have underwritten at 1,200. They would have made sure that they took into consideration increased supply is going to impact their rentals. And I think that's where a factor of most investors who did their due diligence is.
All right, thank you very much. No one will be responding. Kola.
Not if I have something to say about that.
Of course. I mean, my question to you, I've changed it, is what are your thoughts on all these things, demand, confidence, yield, exits, assets, UPDC being one of the few REITs left, Actis making a few comments. What are your thoughts on all of this, and how does it play out in the end for you?
No, I think, again, tying back to what Funke mentioned, that there's a lot of institutionalization of the industry. And it goes back to when you look at all these REITs, and this is part of what I mentioned before, all these institutions that were set up in the industry before. So when we take Union Homes, Union Home REITs, what was it? We pushed Union Bank's assets into a REIT, Sky Bank's assets into a REIT, UPDC, UAC's assets into a REIT. Even Mixta, we're not a REIT. We had ARM's assets that we pushed into a real estate entity. But what we're seeing now is you now have institutions like UPDC willing to work with other PE firms. Again, no relationship, no parent relationship, because they are new institutional investors in that entity. They're willing to work across sector. So before, I would only mostly want to work with ARM, or if I was a UPDC, I would only want to work with just my own UACN or my own properties. But right now, because I have institutional investors and I have returns and yields that I have to deliver on, so I have to reach across. And so I think that's the key thing that is going to continue to drive the industry going forward. And it's a great thing, because before, when you look at residential, the premium residential space, again, it wasn't really about, it was more about storage of wealth, storage of capital, not necessarily about returns. But if I'm an institutional investor that I'm looking at it, I have to look at it from a return perspective. So what that does is that I have to look at the product or the project that I'm going to deliver and make sure that it fits into the market. So, these are changes that, we're seeing going on in the industry.
So, I mean, going forward, what other changes do you think are necessary for the investment climate to improve?
Well, all of us will wish for lower debt rates, but there's only so much you can do about that when inflation is at about 11%.
11.224.
So, so I think we just have to get more, we have to look inwards. And what do I mean by that? So what we do is, so we focus on affordable housing, so again, it's about buyers, right? So what can the buyer afford? For us, anything above 15 million naira for a house, you've missed the market. So yes, you might have your nice developments in the Eco Atlantic, that's a separate market. But for the majority of the country, that's where we see the opportunities. That price point, once you go above 15, 20 million naira, you've missed it. So what do you do to keep interest? You can't control interest rates, you can't control inflation. What do? You have to start looking at building designs. What do you offer as amenities within the buildings? And the same buyer, so when you think about it, income has dropped, cost has gone up. So how do you continue to mix the two? So I think that's still the question of the day. How do you achieve that to buyers that can't really afford what they want, right? And then you have other options like mortgages. We work with the federal government on programs like the FHF program. It's something that I think in the long run, when you look at real estate again, it's the way individuals build their personal balance sheets. So if you don't have that asset on your balance sheet as individuals, we're not going to grow as a country. So it's what we continue to advise the government is that tackle the individual balance sheets first. Once you have that sorted out, things will, if I'm not comfortable about where I'm living, my shelter, right? How do I make other investment decisions in the economy? So that's the way we look at these things.
All right, thank you very much. The next question I have here is for Akin. So I know you're in the markets and you're client-facing 90% of the time. What do you find as the typical challenges when closing your real estate transactions, when you want to close a sale or something corporate? I mean, what are the problems? What are the complaints? What are the things that you normally hear? And what do you think are the ways around those things? Because you hear the most excuses, I think, of all of us. You know, when people say they're not doing this, you're not doing that, I don't have the money, the economy is, we're hearing here 5 to 7 to 10 years, investment outlook for an exit. And that's something that maybe someone like you and maybe the rest of us would have to convince a client of. Aside that, what are the typical challenges that you encounter when trying to close transactions?
Okay, thank you. What I would say is, usually what I like to do, I'll personalize it, is to understand the need of the client so that we don't offer a wrong product. So, for instance, if what we're marketing is apartment blocks on the mainland, we wouldn't, depending on the price point, depending on the need and requirements of the client, won't be offering something that is out of the ordinary. So understand the need of the client first and get the right product. I'm sure every broker here will agree with me that even when you receive an offer letter, even when it's accepted, that is just the first stage of the process. So you look at the documentation, you look at the process, you also look at the procedure. Most brokers, depending on your level of experience, you wear many hats. Sometimes you have to wear the mediation hat and begin to guide the transaction as much as possible. Sometimes you even become a counselor, so to speak, so you try to mediate on both sides. You would agree that brokers will only get paid when the deal is done. So it's a winner takes all. So when you've done 75%, 95% of the work, you do not get your commissions. So it is very key that you try to marshal the transaction all through. Unfortunately, here in Nigeria, we don't have what is called a titling company. In other climes, you hear, you see that are they're like a trusted third party that try to mediate between the two. So in terms of documentation, in terms of the searches, in terms of the fees, they try to guide the entire transaction. So there's trust in between. Trust is a major factor that usually poses a lot of challenges in closing real estate transactions from my perspective also. Yeah, so just a little bit of my thoughts.
All right, thank you very much. Moving quickly now, as we begin to get to the end of this, asset management is critical. It's important for any, investment framework. What do you find as the leading issues for asset management in Nigeria? Deborah, that's to you. And what do you think, the ways out are, seeing that, you're with UPDC, you have the REIT and the assets and all of that?
Okay, so I know we had discussed this previously. I still believe that the biggest issue faced with asset management is really just a lack of understanding of what asset management really is. I think oftentimes property owners confuse facilities management and property management for asset management, and they're two very different things. So facilities management, as we know, is managing the building operations, so the power, security, cleaning, etc., and trying to improve the tenant's experience or the occupier's experience of the building. Property management is probably more focused on the leasing side of things, so just making sure that you send your rent renewals out, you collect your rent, etc. Asset management is wider than that. Asset management is actually finding a way to maximize the value of your investment. So basically sweating the asset. And facilities management and property management typically report into asset management. With asset management, you would start from the pre-development stage of any new building. So you would do the market analysis. Funke mentioned understanding the cycles of real estate. So if you are estimating that you're going to get your $1,000 now, you would do the analysis and sensitize it and see, look, will this still be a viable investment if rent rates drop by 50%, for example, or occupancy levels drop by XYZ%. You would also, apart from just understanding the where the market is going, so it's that investment appraisal side of things, an asset manager would focus on the disposal, the acquisition, the refurbishment, and new developments as well. So that's the key thing in understanding what asset management truly is. Now, that being said, other challenges apart from that lack of understanding of what asset management is. So for an asset manager, it's the availability of what you would call investment grade assets to manage in the first place. So for example, the UPDC REIT has cash to invest, but when you look out across the market, it's finding, you have to be almost obsessive about yield because you have to give returns to your unit holders. Finding investment grade assets that meet certain investment criteria to give you that comfort and security that you're buying an asset that you can hold for the long term. So that's one of the biggest challenges. And one thing I'd say to any developer out there is, if you're looking for an exit, make sure that whatever you're building, understand the investment criteria of who it is that you want to buy the property from you at whichever point of exit that you choose. Another challenge we face in Nigeria, especially with asset management, is just the general lack of data. So being able to understand, everyone is very sort of protective about the data on their developments. If there was a lot more transparency and everyone was willing to share information, it would actually create more confidence for other investors. So everyone would benefit. But at the moment, there's just a lack of transparency. There's a particular firm, I think Estate Intel, that's doing a lot of work to try and increase transparency of different real estate transactions. So people don't want to disclose what rent you are renting to certain tenants, or if you sold a property, disclose how much you sold it for. But those are key things that an asset manager will need to know to really be able to understand the market. So I think those are the three major challenges.
Well said. Just to touch on the transparency comment you made, I do agree that Nigeria still has, quite a distance to go. But I also want to say maybe we're not where, we once were. I know, 4 to 6 years ago, the JLL Transparency Index put us in the early hundreds, and right now we are about 67, 68, if memory doesn't fail me. So it does indicate that there is a movement towards more transparency. Well, maybe it's a cultural thing. Maybe it's something that we're just getting into as a people. I find that it's getting easier to get information. So we published our half-year outlook research report, and one of the grade A owners, called me up and said, Ayo, look, this is not what my rents are. If you had called me, I would have told you. I said, well, this is new. I have called you before and you never told me. So that's what's happening. And, I spoke with a colleague of mine here, and he's willing to give me so much information, which would not have been the case 2 to 3 years ago. So transparency is very key. It's something that we have to keep working on. On the thing of data availability or the lack thereof, I think Estate Intel is doing a good job. Property Pro, there's so many of these guys out there now, PropTech, leading the charge to let people know what's going on. Because, in Nigeria here, once we know something can be immensely profitable, we tend to take it seriously as a people. And it is now a definite request for clients that Whatever you're giving me must be clear, must be transparent. I must be able to connect the dots, or else I will not take you seriously. So it's now in the interest of everybody in the market to show as much data, as much information as they can. And I think we are on our way. I think you can clap for me now. Nobody has clapped for me before. All right. I think I have maybe 20 minutes, so we can save up on some time. I will go to Mrs. Olufunke. So you also meet clients, on an institutional level, and you also, are in meetings with them and you are in the conversations. What are they most concerned about investing in Nigeria in 2019? And I will also add 2020. What are the leading concerns? What are the things that worry them the most? And what do you think, as developers, as players in the property industry, what do you think our response to that should be?
I think the major issue in terms of confidence for investing in Nigeria had to do with the downturn of the devaluation. And I think there's always that sense of concern in terms of, are we really over that? As you know, I think the story is that the economy is not diversified, particularly on government revenues or earnings of foreign exchange, which is very, very focused on oil industry or the oil performance. I think while the government has recognized this to be a key concern, and there are certain policies in place that have been outlined in the economic recovery and growth plan, I think the big question is in terms of implementation of those policies. So following the volatility in terms of FX, which we all witnessed, and the fact that we've now had stability since April of 2017 with the introduction of the NAFEX index, I think that has given some comfort. But every once in a while, there is some concerns, and that's all focused on the oil price, which, unfortunately, we do not really influence the factors there. So there always is that continued nervousness. And I think that puts pressure on the government to implement the policies that have been indicated in their economic recovery and growth plans. Key ones there is a single exchange rate, which is outlined by them. It's the implementation of cost-reflective tariffs for the power industry, which we think is definitely one of the major challenges for the economy and business in general, to ensure the competitiveness of production in Nigeria and allow companies to be able to produce effectively and also attract a number of businesses, so for local production and job creation. And another key one is in terms of the removal of the fuel subsidy that puts a lot of pressure on government. So I'm not saying anything the government has not said itself. I think they've put this out there in their economic and growth plans. And I think the big question people ask is, where is the implementation plan to go with this growth plan? So we are watching as the government will put out an implementation plan. And I think that's the key thing that makes investors wary about Nigeria in general. That said, I have said, and the key attraction actually for investment in Nigeria is actually secular. It's based on the population, it's based on the level of urbanization that is growing, and this is just driving demand for goods and services. But you need that enabling environment to totally unleash the opportunity in that space.
Thank you very much for that response. So I have a second round of questions, but I suspect we might not be able to get to that. So I'll just go to the second, open house question, because in most panels that I am opportune to moderate, we always hear the government should do, private sector should do, private sector should do. So I think my next question, starting with Kola, would be, who has a better chance of improving Nigeria's real estate investment climate, the government or the private sector, and why? And just a little caveat, we're not allowed to pick both. So just so that it's something we do in Nigeria. We like to...
I think Funke has just answered the question, really. We had a series of roadshows that we went on.
Roadshows, yes.
And internationally, and the resounding thing was, look, there's a lot of capital out there that wants to come into Africa.
Okay.
Now, what you now realize is that if any major player is investing in Africa, they must participate in Nigeria. They want to. However, the government is not helping them.
So what is the government not doing? What is the government not doing?
I think implementation. So there's no way I can, look, the reality is that all we require from the government is just to establish that enabling environment. The private sector can drive it. It's only the private sector that can drive it. So there's no way I can say
you can't escape my panel like this. When you say, sorry, this is a private conversation, you just happen to be here. Now, if you say enabling environment, because I know what you're capable of intellectually, so you can't tell me enabling environment and escape. When you say enabling environment, what do you mean?
I think Funke has mentioned everything.
Okay.
So implementation of these plans,
okay,
right? What is the plan? What is you need to give some confidence to investors that this is our roadmap and this is where we're going. That confidence would give a lot of international investors the ability or the understanding of the market. Once investors are confident that, look, there's a plan,
and we're following the plan,
and they're following through on the plan, then they'll come in.
Okay.
So right now I'll almost drive towards the government. Let's fix whatever we need to fix.
Okay.
And let's move on.
So you probably say 60% government or 80% government?
I would say 80% government, honestly.
Okay.
And then we'll come in.
Okay, so build the plan, follow the plan, and then we will fly in and then work with it. Okay, thank you. Thank you very much. Sorry for the push there. I just had to get something outside enabling environment. I'm sick of hearing it. Okay, Akin, you're up next.
All right, thanks. If not for your caveat, I would have said both, but...
I knew somebody on this panel would want to do that.
If I'd like to make reference to the International Property Scorecard, there are a couple of things that the government can put in place to make the enable environment, as Kola has said, access to credit, making sure the laws, government regulation should be in place. We know how long disputes take to get resolved in this country. Little things like that. Entrepreneurs are usually very resilient, but you put the right policies in place, and I think things will now fall into place.
All right, thank you. Thank you very much. So you would also say government 90%, Akin, 85 or 100?
More like 50-50.
Okay, 50-50. Yes, Deborah.
So yeah, I think I agree with my fellow panelists. I mean, it has to be government to first create, both parties have to work hand in hand, but the government first have to create the enabling environment. So the government has to do the basics just to help any developer build at an affordable price. So we already know land prices are high, but the second largest cost of developing is the cost of building your own infrastructure for your development. You are literally creating your own local government in your development. You're providing your own power, water. Most of the time you're building your own road just to give your occupiers access to your property. So the government first have to just do the basic and provide the infrastructure that we need to remove that cost from the cost base of developers. At the moment, we import 80% of the materials we use to develop. If the government just improved the supply of power and made it more efficient, we could actually start creating and manufacturing some of those materials locally. That will reduce the importation costs for a developer, and it will not just improve the environment, but also reduce the cost of building. Now, the last thing I feel like government should do is just the cost of borrowing. Most developers don't have all the money that they need to develop, so they need to borrow. But the high cost of borrowing just often makes it prohibitive. So there's something that the government needs to do there to reduce the cost of borrowing. Now, that being said, there is still a part that the private sector must play. And as I said before, we need to start building for Nigerians. We're so focused on building for an international investor to come in and invest in my property, building for an international, like a multinational to come and, take space in my property or buy my property. We need to stop taking all of the value we're creating outwards and bringing it inwards for ourselves. So I think that is, if we start to build for the local community, we are helping grow our community instead of taking our investment outside.
Thank you. I mean, that just connects snugly to what Kola said about the price point being, around 15 million. Anything above that, it's okay. Funke.
I'll say, in addition to the point I made earlier, which I think really answers this question from my own perspective, I think one thing I connect to generally is in terms of maybe, let me say two things. One is that there's this whole sense that we should become more, self-sustaining in terms of promote local production for jobs creation, which I totally agree to. The solution right now is that let us close all our borders and let us be able to produce the activity sets themselves before we're in a position to be competitive, before we have power, before we have roots, before we have rail. And that's really the reason why you have to close your borders. So it's like a cause and effect. We're treating the effect. We are not focusing on the cause of the economy. And this is totally sits with government. We've had a substitution mentality since all our sort of rounds of industrialization is about what do we consume? Can we produce it ourselves? Not about where we have comparative advantage. What can we produce most competitively in the global world and sell and earn dollars and be able to utilize it? If you have power, if you have roads, if you have rail, no one will be able to go to China and import in more competitively, price more than your cost of your production. And we are always not focused on this. We are always focused on just saying we want to close our borders. We've tried it in the 60s, 70s. We're still doing it in 2000 and almost 20. And I don't see how we're going to. So that is something we have to deal with. And I think that lies with government in terms of government policies. Even if this is for a short while to say, let us stave the bleeding, we must deal with power. We must deal with those fundamental issues for sustainable long-term growth in our economy. And I think that's, and like I said, real estate, which is what we're discussing, is really a function of, the demand that is driven from all the other activities. So it is in our interest to really look through the overall economy to try and say who requires our services and how do we provide them. So to that extent, my question or my answer is broadened to look at the overall economy itself and what do we need to do to grow in a sustainable manner.
Thank you very much. Thank you very much. So with that, we've come to the end of the panel session. A round of applause for all our esteemed speakers. Thank you very much. I heard that we have one or two questions, so I think you could raise your hand. Okay, there's a young man with a tie. Who else? Okay, so we'll just take that question, and I think we're ahead of time by a few. So, yes, sir. Thank you very much. I was going to ask you to introduce yourself, but
I'm just Femi Akitunde, all from it.
Yes,
I just
sir.
want to make a point around something Kola mentioned, which Deborah also seemed to support.
Yes, please.
When we talk about building for Nigeria and price point and affordability, we really need to make it clear that this is a market that has different segments. As developers, we must target the market we want to serve. You can't serve all the markets. So I see some developers, they want to serve from low-income housing all through to luxury development. I think that's where the problem is. For me, issue about price point of 15 million naira and anything above that to get it wrong, I 100% disagree. Because it depends on who you are building for. There are people who will not even buy 50 million. They stay at 5 million and less. And there are people who, if you offer them property of 50 million today, they walk away from you. They cut the check for 200 million and above. And that's where they want to live. That's what they want to buy. So let's just define what affordability really means. It depends on the market and the affordability of the people that play in that segment. So thank you very much. That's my contribution.
All right. Thank you. Thank you very much. We have one question here from a gentleman in front. Thank you.
Morning.
Okay, and then there's a lady, at the back.
Tola Akikungwe, Building Design Workshop.
Sorry, I didn't get that?
Tola Akikungwe,
Okay.
Building Design Workshop.
Okay.
I agree with Build Nigeria. And I think the point that was being made was the excess capacity in the luxury market was actually exacerbated when local content came into law. With companies, all the IOCs having 30, 40, 50 apartments in Ikoyi multiplied by 10. And because of the local content, that market disappeared. But there are young people, 25 to 35, who are looking for accommodation. And they're migrating from great distances because whilst there is oversupply in Ikoyi, VI, and Lekki, if you build an apartment in Yaba, before the paint is dry, you would have a horde looking for it. So that is where the market is. In terms of building for what I'll call the Hyundai market, everybody's looking at the Rolls Royce at the top of the pyramid. But at the Toyota Corolla band, yes, 300,000 cars versus 11 million. That is where Nigeria is, and that is where we're going to be able to. And also in terms of A-grade offices, they're B-grade business park type offices for young entrepreneurs, for startups. That is where we must begin to look at. Because Nigerians, as somebody said, we're resilient.
Yeah.
Give Nigerians the opportunity, we would fill in the space. So I think in that sort of space, we're going to be competitive.
Right, thank you very much. A round of applause for that, please. So we have a lady at the back, and I think with that, we can just round up the session until we move on to the next. Lady's now standing. She was at the back, she's now standing. All right, thank you.
Good morning, my name is Rahima Tuaminu Aliu. I'm Executive Director, Loans and Mortgages from Federal Mortgage Bank.
Sorry, I can't hear you. You said?
Federal Mortgage Bank of
Okay,
Nigeria.
okay.
Mine is also not a question. It is building on what the panelists have said in respect of your question that whether it is the government or investors.
Right.
They have all agreed on that it cannot be one with the exception of the other. It is both encompassing, and they have also looked at the major player is government should provide all the enabling environment, as they have said, and they have also said what the enabling environments are, the policies and the plans, and then we can build on, as the last speaker have said. That's it.
All right then. Thank you very much. Okay, you just respond and then we can call it a day.
Thank you. I think this question about affordability or definition of affordability keeps coming up over and over. Look, we looked at this and we said, look, anything below 5 million naira, or let's take 4 million naira or something, is social housing, right? That's where the population really is. That's where the demand really is. However, it's impossible for the private sector to work in that area because of the cost. If you want to develop something decent that people can live in, because of the cost and all the impediments that we've raised. Now, affordability is always subject to each market. So in Benin, we did a project and we sold houses for about 6 million naira. We sold. In Lagos, we're selling houses from 10 million naira, 15 million naira. But again, anything between 5 and 15 million naira is what we call the mid-income area. I don't think these things are, they're not difficult any longer. Now, above that, what we're saying is that, look, the size of that market above that range is very minute. So we have to continue, and it's very interesting. In Benin, part of the agreement we had with the state was that we had to get all the content from Edo State. It was very difficult, but we did it. So you have glass in Edo State, tiles, you have them there in Edo State. So again, it's the government that mandated that, look, because they want to also drive employment and other things, they made this mandate, and we're still able to bring our costs down. So it's market specific in terms of affordability, but there's still you have to look at where the size of the market really is.
All right, thank you very much. Round of applause one more time.